Hey guys, welcome back to the channel. Today we will be talking about CTOS and why is it down, what's going to happen, and essentially is it still a viable investment? Now, as usual, before we begin, now this should be taken as financial advice. If you want that sort of advice, please speak to a professional. Another disclaimer, we do not own shares in CTOS. Now guys, if you're interested in building a six-figure stock portfolio starting from absolutely scratch, we have the perfect free guidebook for you to check out. Link is in the comments or the description to download. Okay, Jonathan, so we're going to talk a little bit about CTOS today, actually quite a lot. Now, some context guys, all time is actually below IPO price based on Google, correct? And it is also down 30% since 15 October, which is the all-time high.
Yes.
Doesn't look too good, right? It was a very anticipated IPO, and it is a fantastic company in many ways.
Yeah.
But maybe let's go through some of the reasons, or more like what's actually happening to the company.
Right, sure. Okay, right. So I think the first thing we can look at is their latest quarterly reports. So we're just going to go in depth on each of their financial statements, the income statement, balance sheet, and the cash flow, and also what have they been doing with their business. Okay, so the first thing, income statement, right? The first few top line, sales has been going up 18%, and that's great. But one thing that I don't think a lot of people will pay attention is actually their COGS. The cost of sales, it actually went up more than 51%.
Yeah.
So, which means either they are hiring more labor or maybe they are buying more costs related to their sales. Maybe it's because of all of their associates and subsidiary. That I'm not sure.
Sure.
Yeah, but the positive thing is that their net profit actually grew more than their sales and also their operating.
That's the interesting bit, right? If sales goes up 18%, but COGS only and go up 51%, profit is actually higher than
74%. Yeah, so actually if you look at the line that I actually drew, there's a small little box at the bottom there. You see share of profit of associate.
Right.
So if you notice that number, right, it actually grew more than 200% in that one quarter. So maybe I'll later take you guys through which associate is that is actually contributing to their profit. Actually is at the next slide. So if you read the news or maybe even read their quarterly reports, right, you notice that there's these two associates that is currently contributing to their profit because they own stakes in those companies.
Right.
So the first one is the Jewelry Stack, which is also something like CTOS. I mean, it's like a small version of CTOS. They also like have all those loan information or credibility of all the commercial or personal details. And this is actually acquired this year. In March 2022, and it's actually a Malaysian company lah. It's Guidebook Berhad.
I see.
Yeah, and another one is basically their existing associate, which actually they did mention in their prospectus. It is their Thailand business, which is the Business Online Public Company, or BOL for short, and that one actually tripled their profit.
Wow.
From 1.7 to 5.7.
So they're on an acquisition spree. We'll talk about how they are financing all this later on.
Yeah, so the thing is that the profits are actually, I would say like 10 to 20% of the growth actually comes from their share of associates. Yeah, so that's one thing to note lah. It's not really that the company is really growing. It's more of their associates that they purchase. Okay, so if you look at their balance sheet, right, there's actually a few interesting things that you can actually look at. So the first thing is that under their non-current asset, right, you notice that they actually added 267 million in investment. So if you look at the investments in associate and other investment, right, they actually did explain to this. The investment is associate is actually mainly of the acquisition of Jewelry Stack that just now I mentioned. They acquired in March 2022. So that is one of the costs of it. And then actually another one is their new acquisition of this company, which I won't divulge here yet. I'll tell you guys later. And another line that actually caught my attention is that they liquidated some cash in their balance. So if you notice, right, about 9.4 million of this cash inside their bank has been basically they sell to store it somewhere lah. And they did actually tell you where did they store it. So if you notice, this 9.4 million is actually stored in their current liabilities right now. And it is at this segment called the contingent consideration. So for those of you guys don't know what is contingent consideration, it is basically like an obligation from a buyer to a seller that they will pay them if, let's say, the conditions are met. So it is something like a spare money to park it somewhere first,
right?
So that you pay that seller in the eventually in the future. So that number, the 9.4 million, is actually stored in their this consideration.
So in a way, it's not really a liability. It's more like cash in the future
but
to
I
use.
think it's kind of like an obligation. It's like a promise.
I see, no wonder.
So it is a liability. Yeah.
In that sense.
Yeah.
Okay.
And another thing that you think notice is that they actually draw down quite a number of loans. So the first thing, their long-term loan actually increased like 66 million. And
from zero, right?
Yeah, from zero essentially. And the next two things that you actually can look is that they issued more shares. So that is something that you will actually notice if, let's say, you pay attention to the company, because they actually raised like private placement for this one acquisition, which I'll tell you guys later. And another thing is you notice that their retained earning only increased like about 20.1 million. Okay, so if you notice, right, their previous slide, which is their income statement, their profit is actually around 34 million.
Yeah.
And
exactly.
retained earnings only increased 20 million.
Yeah.
So there's like about 14 million missing over here.
In a way.
Yeah. So actually those, if you read in the cash flow statement, right, it's actually over there. The 40 million is actually distributed in dividends.
Let's find out. Where is it?
I don't. So if you notice in the cash flow statement, I didn't put the bracket, but it's on top of the drawdown of borrowings. So there's about 14.7 million ish.
Yep.
So that is actually paid to the investors. And recently they also did announce a dividend payout to investors. So that is where they did share with you guys the profit that they made for
so
this.
The dividend yield is going up
Slightly I'll say
slightly.
in a bit. Okay, so over here you've noticed that because they are investing in all of these associates, right? So you notice that in their cash flow of investing activities, they actually increase by about 264 million. That's how much they actually spend for that particular quarter.
Right.
And of course, you notice also there's a proceed of issuance of shares over there, which basically they raise the private placement in the next slide I'm going to be explaining.
Yes.
Yeah.
As usual, guys, if you're liking the content so far, give it a like. Tell us in the comments whether you actually like it or not and what we can improve on. And of course, subscribe to the channel. Click on the notification bell so that when new videos pop, you know it fresh. Okay, so there was a mystery just now, right?
Yep.
How is it they only make 30 million but they have like so much additional cash, right?
Yeah, exactly. So this is actually,
earnings,
so this is actually how they got all this money. So the first one is obviously they did do a private placement on March 2022, which is this year, to acquire the quite recent acquisition, which is the jewelry stake. That one is in March or so itself. So they raised about 173.8 million just from that PP alone. And another thing is that, if you look at their liabilities, you also know that they did draw down a lot of loans like recent. So all of these new loans and also the contingent liability that just now I mentioned, the 9.4 million one. So if you add up all together, they actually managed to raise 97.4 million from the banks, and some of it is actually from their cash balance. And if you totally up everything, it's around 270 million roughly. And just nice to actually acquire these three companies. So the three companies that they actually did acquire are not really fully acquired. It's just like some of the shares only. So the number one is Jewelry Stack. They bought it for a cash of 205.8 million. And then another one is they added more shares in the Thailand associate, which is the Business Online Public Company Limited. That one cost them around 26.2 million. And last but not least, they did acquire some shares from this interesting company, which is the RAM Ratings Berhad. Right. Yeah. So all in all, if you add up all of this, the cost of acquisition is around 264 million. And just nice, they managed to raise all of these funds just to acquire all three of these shares. But I don't think they're going to stop over here, because they did mention that they're going to potentially acquire more shares from RAM Ratings Berhad. So they actually really like these RAM Ratings. Okay, so for those who actually don't know, how I'll actually explain RAM Ratings to someone else, right, is that you know Moody's, right? Moody's
Yeah,
or
yeah.
the Fitch rating.
Yes,
Fitch rating. Yeah.
yes.
So they are basically like Malaysian version of those two. Yeah.
And the key thing about the RAM acquisition, so based on my, talking to industry insiders,
Yep.
is that they will. It's the second largest player actually
Yeah.
in Malaysia after CTOS lah.
Yeah, exactly.
So
exactly.
imagine the biggest player buying the second biggest player. Essentially, what they're trying to do is, my guess lah, is to create a monopoly situation.
Yeah, and trying to build their empire lah.
So
basically.
that way, right, they can start raising prices lah as time passes.
Oh boy.
So
Yeah,
that's just my theory lah,
Yeah.
at least.
Okay, so the potential acquisition, they actually set like a quotation to RAM. So they say that they're gonna spend around 139.3 million to buy, I think, roughly about 51% stake in RAM. So currently they have 19% stake. So with this acquisition, right, it will actually build up their equity interest of like 70% in RAM
Right.
holdings. So yeah. And this is a data that you wouldn't get in any public information unless you actually download it from SSM. And if you want to buy this you have to pay money to buy this information.
Yep.
So I decided to spend a little bit of my hard-earned money to to just like take a sneak peek on RAM's financial holdings. So this is what I found is that their profit for financial year 2021 was around 5 million.
Okay.
But I didn't put the data over here lah, but I'm just gonna disclose over here. But the profit actually dropped.
Okay.
Their previous financial year end for 2020 and 2019, they actually made around 8.4 million. So from 8.4 million, their profit dropped to 5 million. So that's actually
So that's why I think in our private discussions, I think they are acquiring RAM not simply because of the
money.
cash generation
Yeah.
itself. There's something, it could be the data, it could be the fact that it becomes a monopoly because now, clients, instead of having two or three different two sources of
two different
reports, right?
exactly. So they
That's
can
one.
consolidate into one. Yeah,
Correct.
exactly. So I actually did a rough estimation of how much are they valuing RAM.
Yeah.
So roughly from what they paid and what RAMs are making at that current moment, right? I think they're paying around 28 times earning, which they kind of value that company quite well.
Right.
But I didn't really take into consideration of how much cash or debt that RAM has. But RAM actually essentially have like close to zero debt actually.
Right.
The only thing is that cash only, but the cash they didn't really like disclose how much cash do they have, so I didn't really estimate lah. So so this is our final takeaway, what to expect right from this. So the first key thing is that how is CTOS gonna raise 139 million in like 12 months? I think it's impossible just from their business and the profits from share associate alone, because they only make like around 30 to 40 million per I'll say per year lah.
Correct.
So this is how they're gonna do it. You may potentially have another dilution in the company. Potential means they're gonna raise more.
So the
funds.
question is, are you willing to trade away your stake for a higher or more monopolistic position?
Yep, exactly. So two things are, they can either raise money from either like equity or maybe even raise money from the bank.
Right.
So if they raise money from the bank, means they have to pay more finance costs in a way. Yeah, so that's another thing that will harm their profit in the near term. But the good thing for this trade-off is that they can get more data for CTOS. Like as you mentioned just now, they can actually consolidate all of these data into just buying the reports from CTOS itself. You don't need to like go through RAM holdings or go through another third party just to get that particular source of data. So everything is becoming more easy to acquire. You just need to go to this one company only. And they are the only company who has this information.
Right.
So this actually gives them like a moat. Like a mode. I think if I'm not mistaken, it's something like a legitimacy mode kind of mode. Right?
Correct. And the difference is that in like America, there's many others. Moody's is just one of them. There's Fitch, there's S&P. But with it seems like CTOS is the only game in town, and I think they plan to go regional. Because
exactly.
if you can, maybe you can link our old video here.
Oh yes.
We did a video on CTOS, and we stated that actually they took out the Filipino.
One of the
correct. So very interesting.
Yep. And the final thing is that I don't think you expect much of a profit or cash flow drive from this company, like there's a growth in their profit or cash flow because of all of this expansion, right? So there will still be pain in the short term, but whether they will start to grow their cash flow or profit in the future, that is something that we will know in the future, because we're not sure whether will they still continue expanding their business or not, or do they like stop. And then they just focus on their business. So that is something you need to take note of if you are interested to invest in this company. And I think that's about it.
I think it's well done. So I guess, guys, this will be the video. If you enjoy it, or if you think someone might enjoy it, please share it with them. And of course, follow us on our socials and all that. And we'll see you in the next video.